working on big deals, I would say, right now.
Yes, visa plus the residency of the country of Dubai.
So why everyone is buying with cash?
Uh,
My whole career, I never closed a deal with mortgage.
let's begin.
Welcome back to the Modern Living Show, the real deal. Today I have Elsie on my side. Welcome.
Thank you, Noah.
Amazing. Maybe you introduce yourself a bit.
Hi, I'm Elsie, real estate advisor. Today we're talking about mortgages, as you think.
Yes, we talk about mortgages.
Yeah.
Straight up to the beginning, in my whole career, I never closed a deal with mortgage.
Well, I've closed one deal. I'll not say I've closed so many. So right now I have a few in pipeline.
Okay.
But the main question is how it works. Because
Yeah.
mostly for mortgages, I've only closed with one client. The process was a bit smooth. Since she was a resident,
Yeah.
it took only like a month, and a few documents were required from this client. So for now, I just have a few who are into the pipeline, but most of them are non-residents. So,
It's difficult to get the mortgage in Dubai when they're not the residents, right?
well, it's difficult. I'll say it's 50-50, but it's a little bit difficult because the documentation required, there's so many documentation that are required, mostly for non-residents. And if you not have like a stable job that is having a flow of income, it's really, really difficult.
Okay.
Yeah.
So I never closed a deal with mortgage, so always was cash to cash. So it
Yeah.
was very easy. So what is the process? Let's say I'm residents and I want to buy something with mortgage. What do I need to do? What do I need to show? How
Okay.
long it would take? Like many questions for a buyer. Maybe he's interested to get the mortgage.
Okay, should we start with the resident?
Let's start with the resident. Yeah.
Okay, for the residents, what they'll need their original passports, of course, and the visa plus the residency of the country of Dubai. And then they'll need salary certificates from the bank and from their company to show that they are applicable or they are approved to have a mortgage. And basically that's it. They'll go through their financial statements, how the cash inflow is coming in.
Yeah.
So for them it's a bit smoother. It will take maximum, it can take it a month. That's maximum for a resident
To get the approval.
to get the approval if
Uh,
all the documents are in order.
and
That's
then-
maximum. For a short period of time, if it's minimum, it will take maximum like 2 weeks if all the documents are in place and in order and there is no any problems with their financial background and everything. Yeah.
Okay. I mean, you closed 1-2 deals in mortgage already, right?
Yeah, I closed one so far.
They've
And
been
the
easy?
other one is still in the pipeline since the client is a non-resident.
Okay.
So it's quite taking a little bit of time because of the bank in his country. He needs to provide so many bank statements, like 6 months, and then it's taking a little bit of time. Since he doesn't even have like a stable work, like a stable job, so there's a lot of paperwork that is really required.
Okay.
Yeah.
Crazy. Okay, so what's the process? Signing A/B papers with the seller and buyer, and then going over to the F and taking the contract F and going to approval for the bank. This is how it usually works, right?
Yeah, it always works that way, but however, they'll first need a pre-approval from the bank
Okay.
before they proceed to the seller. So once they get the pre-approval, a bank does what we call an evaluation. It has to go to the property to look at the property if it's worth for their mortgage. So the question is, why do they go for a mortgage? A mortgage works as a collateral. A mortgage is like a loan given to a purchaser, to a borrower, and the property will act like a collateral to the bank. So in this period of time, you'll have your property as an investor.
Yeah.
You'll have a property, and that property will help the bank to hold it as you clear your mortgage with a due period of time.
Okay.
Yeah.
Interesting. So okay, when they get the pre-approval, they have a number. I mean, it's also very interesting because when I notice, okay, when you get the pre-approval,
Yeah.
it's like you going naked in front of the bank because you need to show everything in front of the mortgage advisor as well. Because I know we have a mortgage advisor, and he told me, Noah, when you have someone who's interested, or your agents,
Yes.
they have someone who's interested, they need to be like naked in front of the bank or in front of the mortgage advisor and showing everything what's going on. And then the real budget is coming out, whatever budget they have, right?
Yes.
Okay. That's very interesting also to know, because then with the real pre-approval, with the real number, whatever their budget
Yeah.
is, they can take a look at.
Well, for the budget, let's say a buyer, you must have you offer your budget, and then we, like you said, we have mortgage advisors.
Yeah.
They'll look at your income, like how much you're earning, and then they look at the budget of what you want to purchase. So if in case you go to the bank to evaluate through your papers, they have to check if in case what you want to purchase is within the amount of money you're earning. So
Okay.
they both have to correspond with each other
Yeah.
to know if in case you're worth having a mortgage with them. So you don't just have to come up with any kind of property and say, let's say your salary is around $10,000. I'll speak in dollars. Your salary is around $10,000, and you want to purchase a property of worth, let's say, like $1 million.
Mm-hmm.
They'll have to look into that, and they say if you'll be able to cover up this mortgage.
Yeah.
Yes, so you don't just have to pick anything and you're like, you know what, I want to buy this. So the bank has to go through all this process, and they say, yeah, well, he's capable to cover this, because you also have to be flexible. It's all about flexibility between the bank and the borrower. The
Yeah.
borrower, it's all about flexibility.
Okay, so it takes about 1 month to find out all about this approval, to get the approval.
Yes.
How much can I borrow from the bank, or how much of the worth of the property?
It, like I said, depends on how much you're earning, because
Okay.
they need someone with a stable source of income.
Yeah.
For example, let's say if my client is from cabin crew, they're earning monthly, let's say, a wage of around $3,000,
Mm-hmm.
and maximum they can go up to $5,000. So a cabin crew can come up and say, I want to buy a studio. So the average rate of a studio right now, it's around $120,000. So if you're earning around $3,000 to $5,000, it can be approved, looking at the source of income and how stable your cash flow is coming into
Yeah.
your account.
How long would it take to pay this mortgage off?
So to the duration of time, it depends on your age. I forgot to talk about that.
Ah, okay.
So it depends on your age. There is a limit on when you can apply for a mortgage. So let's say if you're 29 years old, you can have a mortgage that will last for even more than 20 years when you're paying off the mortgage. So it's all about flexibility, your age as well. And it will be very flexible, that it will not get into even your daily life, your daily routine. So it's just a monthly deduction that is taken from you as a buyer.
Okay, so key factors, what's important is you need to know about the income, monthly income,
Yes.
age, residence, passport holder.
Yeah, passport holder.
What else?
And if you're not a resident, like for non-residents, you
Yeah.
need to know your proof of funds.
From
Mainly
your
proof
country.
from your country.
How long it will take? Let's go over to non-residences.
So for the non-residents, there are a few documents that are required from a non-resident. First of all, you look at. We need your passport copy, original passport copy, or
Mhm.
residency copy. You need your home address, the exact home address. You'll require a bank statement of 6 months.
From the past, okay.
Yeah, for your bank statement for 6 months, and then we'll look at your source of income.
Mm-hmm.
Like if you have a stable source of income, like you have a job and you're getting something monthly that is coming into your account, that is looked into as well.
Yeah.
And then your proof of funds. That's it.
Okay.
Yeah.
Let's mix two scenarios: when I'm resident and when I'm non-resident.
Okay.
I'm resident right now. I have
Mhm.
an income of 15,000 euros,
Okay.
and I want to buy an apartment worth, I don't know, 2 million, 3 million. What can I afford? My main question. Let's say I'm really interested.
Okay.
15,000 comes to my bank account every month. What can I afford?
Okay. If you're a non-resident, the first thing you cannot, like according to the financial institutions here, you need to purchase a property that is more than like 1 million dirham. That is equivalent to $300,000.
Mm-hmm.
So you have to look into that first of all before you go for a mortgage. So besides that, you should have like your down payment should be a bit higher than a resident.
Okay, so I need to make a down payment.
Yeah, you need to make a down payment that is like equivalent to 35% of the purchase of the value of the property.
Okay.
Compared to a resident. A resident will pay around 25%, for a non-resident from 35%.
So the bank will take over 70% around, and I need to make a down payment of 25%.
35%.
35%. Okay,
if you're
10% more
non-resident.
than a resident.
Yes.
Okay, so when I'm a resident, I just need to do 25%.
25 or even 20%.
Okay.
Because the bank will cover almost 80% if you're a resident. If you're non-resident, some banks can even let you pay almost 50% of the property value. You can pay like 50%, and then the bank will cover the rest of the of the payment for you.
Okay.
So they'll give you a duration of time that will be, like I told you, it's from 15 to 30 years, depending on your age.
Okay.
And it's also about your flexibility. Like they look into your bank statement and they know, so this is the amount of money you're earning. This is how much the bank will take. So all that, like we call it an evaluation, they'll take you through the whole evaluation of of your cash inflow and the income you're getting. Yeah.
Also important to know, in Dubai, 25% or 20% approximately of the market, when they're buying properties, 20% of the people who are buying are taking loan.
Yeah, for now, mortgages have become a thing right now for mostly the residents.
Yeah.
Because everyone wants to have an investment. If you want to get an investment and you want to get something for yourself, since most of the property, like we know, they're all freehold right now. There are so many properties that are freehold, and there is full ownership. So you're eligible to take a mortgage. Like I said, depends on your financial stability. Yeah. So if you go for a mortgage, it would be a very high advantage.
I mean, it's a good investment. Because even better, let's say you buy off plan.
Yeah.
You have a 50-50 plan. Like we know, all in Dubai, you cannot have a payment plan on off plan properties, just when it's ready.
Yeah.
So when it's ready, you can take the other 50%, make a mortgage on this one.
Exactly.
You paid the 50%. You're getting income. You can rent it out easily.
Yes.
Depends obviously on the area.
Yeah.
And then you could just get the income and the rent. And you can pay off the mortgage. You can pay off
the mortgage, yes. So that's what most people are doing. If you go for an off-plan project, basically you wait until it's handed over. Because of course you go for a mortgage for a handed over property. Yeah. Property has to be ready. You cannot go for a mortgage when it's off-plan. Yeah. It has to be ready. Yeah. So once it's already fully handed over, you apply for a mortgage. You go through the evaluation. The bank comes and sees the property, and then you can rent it out as it covers up your mortgage, and then you can still keep buying more property through the same kind of process. Yeah, I think it's possible.
And the return of investment will be higher as well.
The return of investment will be higher, and it's actually a very high advantage, mostly for investors. Yeah.
So why everyone is buying with cash?
Some people don't want to go through the whole process. Not everyone is comfortable to provide all their documents, like proof of funds, this and that. They don't want to go through the whole process. Some of them just have their cash. Of course, it's all about how heavy your pocket is.
That's the thing, and all the buyers right now in the market have a heavy pocket, and they just pay it off, and they know, okay, it's coming inside, and just need to wait some years, or I'm living in by myself. It's even very good also for the bubble index, because just 20% of the people who are buying in Dubai, they have a mortgage, and also very good that you cannot have a mortgage on off-plan properties. I mean, you have a payment plan, so it's kind of a mortgage.
Yeah.
You pay like 5%, most of the time 5 to 10% as per quarter. Yeah. So it's kind of a payment plan. Yeah.
Yeah, it's kind of, but for the case of the mortgages are put there just in case you're not ready enough, you don't have that full amount of money to put down. Yeah. That's why it's more advantageous for some people who would like to go for investments, mostly because Dubai has been so open to international markets. Yeah. Like you look at international investors coming in, so it's actually an advantage for most of non-residents to come and also start purchasing property here.
Yeah. So it's quite easy to come here, even get a job. You have the Emirates ID.
Exactly.
You have an income, get a property, pay it off over some years, and then you just have an investment.
Yeah, definitely that is actually one of the biggest things that Dubai has really opened up its doors to. It's a diverse country. It's a diverse ground for each and everyone. You can easily just come in, start up something. If you just have, because if you have a mortgage, you can still have a residence visa.
Yeah.
At the same time, so it's more advantageous for investors.
Interesting.
Yeah.
Okay. Anything else someone who wants to have a mortgage needs to know? I think we covered everything.
Something else I'll need to add on is that, like I said, there are different kinds of mortgages as well.
Oh.
There is what we call the fixed rate mortgage.
Mm-hmm.
The fixed rate would be the best mortgage type I would advise for non-residents to go for, because the rate is fixed throughout your loan payment until
Mm-hmm.
you complete your kind of payment. You still the rate will still be fixed for you, compared to the variable rate mortgage.
Okay.
The variable one, it depends on the market trend. If the market is going high, the interest rate will go high. If it goes down, the interest rate will go down. So it's more dangerous compared to the fixed rate.
To the fixed one.
Yeah.
So it's easier to get a fixed one?
Yeah, the fixed one is it's the most common one that is used at the moment.
For sure, I would take the fixed one.
Yeah, definitely. There's also one for, like, Dubai is an Islamic country.
Oh, okay.
And this one, I think it's more for the locals and
Yes.
Muslims. For this one, you don't pay any interest rates.
Hmm.
Yeah, so I think it's mostly done for the
It's also in the culture that you.
It's more culture, so it's not so common for
So when
non-residents.
when you're Muslim, then you take this option.
Exactly.
Okay.
So basically, those are the main types of mortgages that many banks offer, but mostly it's the fixed rate that they look into.
Okay.
Yeah.
Perfect. So I think we covered everything.
Yeah, basically we've covered everything, and it was really nice to be on this podcast.
Amazing.
Maybe next time we'll have something else to discuss.
For sure, we will have another podcast talking about something different.
Yeah,
I mean,
definitely.
you're working on big deals, I would say, right now.
Yes.
So we can make another podcast scene about this.
Yeah,
one.
basically it will be about big deals.
Yeah.
Yeah.
Let's do it then.
Yeah,
Perfect.
sure.
Thanks, Elsie, for having you here. Thanks to the listeners, and we hear each other in the next podcast. Have a good one.
Thank you so much for having me.